Hello and welcome to the All Monitor Brief. It's Friday, July 19th. I'm Kristen Tolman. Today, we're going to go right into the main segment, which is a conversation with Jack Dutton, All Monitor's chief business correspondent. It's on what a report that came out this week had some interesting figures on signs in the Turkish economy that, while look good, might not mean that the economy is on the up and up for all. Let's dive right in. Hey, Jack, welcome back to the All Monitor Brief.
Good to be back on the podcast, Kristen.
Okay, so Jack, it seems like there was some good news, you could say, this week. Good financial news coming out of Turkey, which has, over the last few years, been in a crunch financially. So what were those figures? What stood out? What was the report? Walk us through what were some of the metrics that came out this week.
Sure. Well, it was quite surprising news anyway. It was Swiss bank UBS's Global Wealth Report, and the unlikely front runner in terms of growth in wealth per adult was Turkey. Yes, that's the same Turkey that's been going through an acute economic crisis and seen the lira lose 83% of its value against the US dollar over the last 5 years. But UBS economists said the main cause of Turkey's 157% yearly growth in wealth per adult in the lira was the country's soaring inflation, which obviously has been very bad news for purchasing power, hitting pockets and real earnings, but it's bloating asset prices. So if you're Turkish and you own something like a flat or a house, your wealth would have gone up quite exponentially. And if you look at the 157% yearly growth from Turkey, that's way higher than any of the other countries in the poll. The second, I believe, was Qatar and Russia, which was just around 20%. So that's much more. And there's 157%, as I said, in the Turkish lira growth in wealth per adult. And that translates to about 63% in US dollar.
Okay, so lots of numbers, lots of metrics there. Does this mean that things are moving in a direction where investors and business leaders won't be so concerned over the Turkish economy and be willing to re-enter? Or is this just sort of the first signs?
While it is quite positive in the sense that the Turkish people with houses and different assets are becoming more wealthy, that doesn't necessarily translate to having a lot of cash available because those assets, it's a nominal value. So it's not physical cash, but that can be changed if those assets are sold. The economic reality in Turkey is quite different in the sense for most people because you've seen the cost of living crisis be quite acute. For instance, last year, cost of living in Turkey's most populous city, Istanbul, rose by 78% at the start of the year compared to the year before. But however, we've seen also inflation suddenly lower from the level it was. It hit the highest in the year in May, around 75%, which is extremely high, but we've seen it go down to around 71.6% now. So the finance minister, Mehmet Şimşek, has said this is a period of disinflation. So we are seeing some recovery in the economy, but it's not going to be a quick recovery. And so business leaders, when they look at Turkey, I think they are more optimistic than they were previously before Turkish President Recep Tayyip Erdogan got re-elected. However, it's still quite early to say really how the recovery is going, but there's positive signals for sure because there's been a return to economic orthodoxy, as in increasing interest rates to tame high inflation.
So it almost sounds like there could be turn back potentially orthodox monetary policy or just more aligned with other central banks in the world, but it might not be an equal return if you're Turkish and you didn't own an asset such as a mortgage or a home before this crunch of living crisis. It reminds me, when I was in Turkey, when I used to drink soup, as they say, eat soup every day. And in like November 2022, the cost of one small thing of soup, if you went to just your local Lokanta and got it, was maybe less than a US dollar. And then by the end of 2023, it was about maybe $2 for one. So that's quite an increase. Jack, is there anything that we should be looking out for in terms of financial metrics? I mean, you're the chief business correspondent. You have your head around these themes all the time. What do you think we should be looking for on the horizon?
Sure. Well, I think a lot of the top banks are saying they expect to see a continued period of disinflation, inflation falling as we go in towards year end. Erdogan has been quite bullish on this, and we've seen Deutsche Bank come out, I believe, yesterday saying the same thing. And as long as he has Mehmet Simsek at the helm as a finance czar, I think we'll continue to see economic orthodoxy, as in monetary tightening, until we see the inflation fall. If you look at Erdogan's history in power in Turkey, his first decade in power, he had quite more orthodox monetary fiscal policy, and that supported a large surge in foreign investment. And over that period, the economy expanded by 64% in real terms, leading to an increase in GDP per capita by 43%. Despite high inflation, kept interest rates stubbornly high. And there was uncertainty in the economy forward towards COVID and everything. We had a lot of supply issues, and we had the Ukraine war, and that caused a lot of problems for the Turkish economy. And it saw the lira weaken drastically against the dollar. However, since Erdogan got re-elected in May 2023, the policy has returned to monetary tightening. And this there's also been, as well as deficit reduction, there's been restrictions in public hiring for the coming years. And there's been new measures on direct taxes as well. And we've also seen the central bank since June 2023 raise interest rates aggressively from 8.5% to 50%. And more recently, we've seen Erdogan and Simsek and Fidan, the foreign minister, travel around the Gulf and elsewhere to kind of shore up more sources of support and financing. So after the trip to the Gulf by Erdogan, we've seen an increase in deposits with the central bank from these countries and other sources of support. And we have seen an influx of foreign capital into Turkey as they've seen more encouraging signs with the economy. For instance, foreign heavyweights like PIMCO and Bankard we've seen. However, it's a little too early to know whether this is going to be sustained, but so far the signals are positive.
Jack, thank you so much for keeping us up to the minute. We really appreciate it, and kudos on the stellar reporting.
Thank you very much.
That's it for today, July 19th. You can read this story and others impacting the region at allmonitor.com.